Good afternoon. Thanks for tuning in. You're watching Ask Speak You on BloombergQuint Live. I'm Navneet Saloja D'Souza.
Good afternoon, Navneet. I'm Agam Vakil. If you've got questions on equity, this show is perfect for you. Send them to us on Twitter, Facebook, and YouTube, and of course, WhatsApp. And you can also call us on 022-454-04141, or of course, just mail us on askspeakyou@bloombergquint.com. Just do make sure that you do add the AskSpeakYou hashtag.
All right, and before we get to the individual queries on the show, let's quickly take a look as to what's happening with the markets. It's the fifth straight day of fall coming in, and we've been breaching key levels almost every day. And today, we breached the mark of 11,602. So index is trading with cuts of about 100 points, and Sensex also down about 300 points in trade. Remember, today is Thursday, and also the monthly contracts of derivatives expired today. So volatility has been on the higher side for last 3 or 4 sessions. Remains to be seen if the last 1 hour turns out to be eventful or not. 18.6 is where India VIX currently trades. In fact, the broader markets today have underperformed. If you look at the mid-cap as well as the small-cap indices, they've corrected more. Look at that. Small-cap index is down as much as 1.7%, while the mid-cap index is down 1.2%. Market breadth has been weak right from the word go in the morning, and there is just no improvement when it comes to the market breadth. The ratio seems to be almost 1:4 in favor of the declines. Nifty contributors list should also come up on your screen, telling you which are the stocks which are dragging Nifty lower today. So dominated by heavyweights, and financials take the lead. ICICI Bank, HDFC Bank as well as SBI are the one which are the key contributors on the downside, and Reliance continues to correct. Remember, this has been dragging Nifty lower for last 3 or 4 sessions, while some support coming in from companies like Titan, Kotak, Maruti, Sun Pharma, but they don't have much weightage on the index. In terms of sectoral indices, all of them are trading with cuts. You've got Realty, Media, PSU Banking Index, which are your key laggards at the moment. Some of the gainers from the broader markets, BASF India, which was up in yesterday's trade as well, is up another 8 to 9%. Aarti Drugs is up. In fact, this one's gained about 20% in last 8 sessions. And Federal Bank has gained after, in the analyst meet, they highlighted that they are targeting ROA of about 1.25% in FY21. On the losing side, stocks which were doing well in last many sessions have started to witness profit booking, I guess. And 2 of them being IOL Chemicals and GMM Pfaudler. They've risen a lot in last 1 month, while Madhavan, Sumi, of course, has been weak in last few days. And this one continues to grind lower. So that's down about 3% in trade income.
Okay, well, before we get into our queries, let's address the big news that we have as far as Thomas Cook is concerned. Well, the board has approved a buyback of 2.6 crore shares at about 575 rupees a piece. The buyback will take the promoter holding to 70.5% from 65.6%. To talk more about this, we're in conversation with Madhavan Menon of the CMD of Thomas Cook. Mr. Menon, good afternoon. Thanks for taking the time out. Can we just start off by asking you about the rationale behind this buyback at this point in time and the objectives that you are looking forward to fulfill?
Okay. Good morning to you. I just wanted to mention that the board approved a buyback of 2.6 crore shares at a price of 57.5 rupees, which was a 40% premium from the price that prevailed the day prior to our announcement that the board would evaluate this proposal. A second important point is that the majority shareholder Fairfax Financial Holdings, through its subsidiary Fairbridge Capital Mauritius, will not participate in the open offer, primarily as a reflection of their confidence in the underlying value of the company. The rationale behind going out and doing a buyback was primarily driven by a few instances or reasons. The first being the fact that in November we completed our restructuring, and after Quest was spun off, and therefore Thomas Cook was now reflective of a group that was essentially in travel and had subsidiaries with some of the like DEI and Sterling. The second aspect was the advent of the entire coronavirus situation that we are all currently facing. As a management, we believe that there is a strong underlying value in the company, and that these are all temporary events, and that the business will bounce back as soon as normalcy returns to the industry. So therefore, we decided to go ahead with the buyback rather than wait for a dividend distribution that would have been possible post April 1.
Okay. Mr. Menon, of course, these are temporary setbacks, point well taken, but I think you've mentioned in your press release as well, coronavirus is perceived to be a negative for travel industries, and that's the reason we've seen stock also correcting a lot in the recent past, and hence you've come out with a buyback so that shareholders are not impacted because of that. Just want to highlight the stock. Can you just pull up the stock? I think we've lost the connection with Mr. 49.
Right
yeah.
now,
So the buyback is at 57.
57 rupees. Yes.
So I think from yesterday's closing, it should be a premium of about 20 to 21%. We've lost our connection, by the way, with Mr. Menon. We'll try and touch base back with him. But clearly, if you can just pull up last 1 month or last 3 months performance of Thomas Cook, I think it will give you a better sense, because in their press release, they've clearly highlighted that the perceived negative impact of coronavirus on travel businesses has affected company share price, and hence they've gone ahead with buyback. It's a signal to shareholders that management confidence still remains strong. And remember, post this buyback, the promoter holding, which is at 65%, will go up to 70%, and the promoters are not looking to participate in this sort of buyback. Mr. Menon, I think he's back with us. I hope I'm audible to you. I just wanted to know, you mentioned it's a temporary setback,
yes,
coronavirus. But still, tell us, how has the current quarter been like in terms of bookings? How has coronavirus impacted your bookings in the current quarter?
Okay. So as a group, if I look at Southeast Asia, we have actually seen cancellations for travel into Singapore, into Malaysia, into other parts of Southeast Asia, and that's essentially 6% of our total booking volume during this period. Now, very clearly, we don't know when these destinations will come back. However, in the longer term, through the rest of the year, we're looking at Europe, and as of now, we are beginning to see the impact of the entire coronavirus. Now, it's too early to factor in what happened in Italy over the last 2 or 3 days, but the reality is that there is bound to be some blowback in terms of people's fear to travel should they get affected by the coronavirus. My expectation is that we will be impacted by all these factors. We're already seeing our forward bookings sort of soften a bit, both into Europe as well as other destinations. And my expectation is that we will have an overhang of the coronavirus through the last quarter of financial 19-20, and some degree of overhang into the first quarter of 2021. Now, it's extremely difficult at this stage to put numbers on any of this, purely because we don't have any visibility of how the virus is going to behave over the next couple of weeks. The only heartening fact, I think, is that the situation seems to be coming under control in China, because if you measure incremental infections, those numbers have come down significantly. Now, the reason I'm explaining all this is just to sort of make you understand how difficult a situation it is to predict where this is all going. If I look back at what happened in SARS, there was an immediate bounce back after this. We obviously all live in hope and hope that that's exactly the case here. But unfortunately, it's too early to predict.
Right, Mr. Menon, of course, when any company carries out a buyback, this definitely means that there will be an improvement in earnings per share. In your press release, you also suggest that there will be an eventual improvement as far as the return on equity as well as return on capital employed is concerned. So once the buyback is completed, could you give us a rough estimate about how your balance sheet will look like in terms of debt, as well as a possibility, a number when it comes to cash and bank balances?
So first of all, we're going to finance the entire buyback from our own internal accruals, and we will have no liabilities built out of this. The cash in bank initially will come down, but You do know that Thomas Cook generates approximately 200 crores of free cash every year, which lies in our system. So my expectation is that over a very short period of time, we would have covered up whatever payback that we would have made to shareholders. As far as the financial position of Thomas Cook is concerned, we have evaluated all the options, and as I said, we will pay for this from our own internal accruals. It will not affect our financial position at all. We will remain negative working capital, and my expectation is that by the end of the year, our cash position on the balance sheet would have grown to a higher level than it will be immediately after the buyback.
Okay, Mr. Menon, we leave it on that note. Appreciate you joining us and taking us through that rationale behind the buyback, which the board has approved. That's the management of Thomas Cook stock, not reacting too much. Buyback starts on March 7. That's the record date, and it's at 57.5 rupees. All right, let's bring in our guest then. We're joined by Jain of Reliance Securities and Sandeep Jain of Tradeswift Broking are here to answer all your queries. Good afternoon to both of you, gentlemen, and appreciate you joining us today on BloombergQuint. Let me begin with a query on, I think Vikas has some technical calls. Vikas, all right, if you could just take us through your technical calls that you have for us.
If you look at Container Corporation has seen a massive decline from the highs of around 595 odd levels, and today it has witnessed some amount of rebound, holding its 200-week average of 499,500. And we have witnessed some amount of pullback. So believe the 200-week average usually the stock holds after such a sharp fall. So we are expecting some amount of rebound in Container Corporation to 545 levels. So one can do long in the stock at current price with a stop of around 500. And the second stock we like is that Bank Nifty has been in a continuous pressure since the start of the last weekly expiry. And we believe post this expiry, we could see some amount of pullback into the overall markets. So HDFC Bank bull spread can be done with buying a 1200 call option and selling a 1260 call option simultaneously for the March expiry by paying a net spread of around 20 odd rupees, and the target for the spread would be around 45.
Okay, well, those are Vikas's views and calls for today, and of course from there on we talk about a handful of queries coming in, and I'm going to get right to it. We have electronic videos. Well, the viewer suggests that the viewers bought SBI Life at 915. Please advise if I should book losses or add at current levels, or should I switch to HDFC Life or ICICI Prudential? Now, these are the three stocks that usually show up on a lot of investors' lists. But Sandeep, what's your view on this proposition?
Can you please repeat which stock he is trying to exit and is trying to...
Planning to exit SBI Life and looking to get into HDFC Life or ICICI Prudential, or do you think that the investors should stay in SBI Life because the investor is making a little bit of a loss right now, entered into at 915?
See, somehow I feel that, SBI Life, HDFC Life, ICICI, all these are very good picks from the long-term point of view. But then again, since HDFC Life is going to get traded in FNO from next this thing, so I feel that HDFC Life will have some traction also once it gets listed in the FNO segment. So maybe this can be a bit wiser proposition as if he is a trader. Otherwise, if he's a long-term investor, I don't think he should do unnecessary switching.
Okay, that's the view coming in, and yes, HDFC Life will be available in the futures and options market with effect from tomorrow when we start the March series. We've got a query on mail from Pragya Das, and she wants a view on Hero MotoCorp. She's asking, since the stock has been facing correction, at what level should one consider to make a fresh buy here? Hero MotoCorp, of course, is down in today's trade as well. Remember, due to coronavirus, that has had a knock-on impact on all of these auto companies because some of them source their component from China. Vikas, technically on the charts, if somebody wants to make a fresh buy on into Hero MotoCorp, are current levels good enough, or do you expect further downside?
The stock has been on a continuous downtrend, but we believe at current levels the stock could see some amount of stabilize. Because if you look at and roll on with the larger trend, the stock is now almost shooting into 5 years lows, and 2150, 2200 was a good support area. No doubt with the market weakness, we have seen good amount of sell-off into the overall markets. But again, at these levels, the stock is a good entry point because we believe some amount of bounce back could be happen. No doubt 65 rupees, the stock has dropped its dividend last week. So because of which also the stock has seen a good amount of 2.5% direction from the highs. So it is a good entry point at current levels. You can keep a stop of around 1990 and a target of 2330.
Okay. Well, we have Akshay Mittal who's bought Bandhan Bank today. Not today necessarily, but well, he's bought Bandhan Bank at 403. Well, it is today actually. Should I add more at current levels or please give targets? Vikas, why don't you take us through your view on Bandhan Bank? Of course, this is the other entrant in the futures and options space, which will start trading from tomorrow. Vikas?
Yeah, the stock is seeing good amount of underperformance and it is trading near to 52-week lows. Yesterday there was some amount of pullback on the higher side with some amount of positive news flow, but again it receded. So the stock here on the down side now again 365, 370 is a good entry point. It was from where the stock has witnessed a strong amount of pullback last year. So 365, 370 is a good support area. If it comes at that level, it would be a good entry point.
Okay, that's Bandhan Bank for you. Last 3 months, the stock's down about 28%. On Facebook, Sridhar writes to us and he's holding Madhavan Sumi at levels of 145. And remember, we've been highlighting how this company is also being impacted because of the global exposure it has. And the stock is at 108 now. Remember, I think a few months back, it had slipped below the mark of 100 as well. There was some bit of recovery, but once again, there is some relentless selling which has come in here. Last 3 months, the counter is down about 19%. Sandeep, what do you advise if someone's holding Madhavan Sumi at levels of 145, 150? Do you average at current levels? Do you stay put with the position? What to do?
Somehow I have never recommended this stock in the past also. Somehow all those issues in the past actually are still there in the investor's mind also. And I think, at these levels also he shouldn't average because the coronavirus and the international business, whichever companies are in, international businesses and not in domestic consumption, they should be careful. I think we should be careful of investing in these kind of stocks. And even at this level also, I don't think, it will stop here from falling. So stay put will be the right strategy. He should stay put and keep holding the stock. Yeah, that's it.
Okay, we have a query on Poly Medicare and Medicure, pardon me, and this one is from one of the viewers who wants a technical view on Poly Medicure. And of course, right now the stock has gained some traction, notwithstanding today's decline coming through. The viewer, that's Anand Kadam, he's holding it at 322, making a little bit of a loss right now. Vikas, what is your suggestion on Poly Medicure?
Well, I do not track the stock so closely, but if you look at the charts, it has witnessed a massive move from those 220, 220 odd levels to the recent high of 340. So it's now on the complete reversal side. So it's better to exit, or if he wants, he can keep a trailing stop of around 285, 86, which was the previous day's low.
Okay, last 3 months, all right, it's given you really good returns. It's up about 44%, a stock we don't discuss usually. Okay, Sandeep, an interesting query coming in from Matthew on YouTube. He's asking, are there any non-financial stocks which appear to be fairly valued after the correction that we've seen in the markets and which are also not impacted due to coronavirus, and that is no supply chain disruptions for these companies? Is there anything which comes to your mind and is fairly valued at current levels?
You're talking about NBFCs?
Non-financial companies.
Yeah, that's right. So in NBFCs, somehow I feel that, Manappuram is a good bet. In fact, after the bulk deal at 175, the stock corrected also, and I feel 160, 65 is a good range where, the company sees a good buying support also, and the results were extremely good, and the gold prices are also going up. So I think this is one company which is in a sweet spot, and I feel Manappuram can be a good bet. In fact, in today's panic also, the company was actually trading in green, but then, due to overall profit booking, the stock has come down. So 165, 66 can be a level where, one can really get into the stock. And even if he wants to get in right now, then he should be a long-term investor. And I feel that, the stock will easily touch 225 in coming few quarters. And I'll just add something more to the stock which was discussed just now, and that was Poly Medicure. Somehow, technically, there is some profit booking seen because of the overall market conditions also. But fundamentally, the company has been doing very well, because I have seen this company because it's one of their plants is also in Jaipur, and the segment is also very good. And in fact, the return on capital ROC numbers and the growth numbers, they are extremely good. So I feel that those who are holding for long term, they can continue hold the stock, because it has given a very big run up. So technically, I think he is very right that one can exit at these levels, but overall from the longer term, I think one can hold the stock.
Okay, fair enough. But Sandeep, I'll come back to you on capital markets question. We have Praveen Matthews. He wants you to choose between Motilal Oswal, IIFL Wealth and ICICI Securities. Which is the better pick at these valuations for the longer term?
See, somehow I will go with ICICI Securities, and I feel that the way the Karbi episode came up, after that all these banking brokers, broking companies promoted by the banks are in popularity, and somehow ICICI Securities is one of the largest non-discounting premium brokerage company, and the way it has gone up in last few months after the IPO, it saw a big beating, but then now I think it is again picking up, and I feel that at these levels one can wait for some time, because SBI Cards IPO is also one of the major attractions, and maybe because of the markets these stocks may not go up, but otherwise they would have certainly done well. And ICICI Securities from longer term, I think it's a good pick, but one should wait for some declines.
Okay, wait for some declines if you want to deploy money into ICICI Securities. Let me take a query on Reliance Industries, and it's a technical query coming in from a handle called Boss. He's entered into the stock at levels of 1290, and we've been highlighting how the stock's fallen from those levels of 1500 to currently at 1378. I think technically it's trading around its simple 200-day moving average. Vikas, his entry level has been good, 1290, so he's still making money. Would you advise him to just book out from the position, or you would advise to place a stop loss?
Then place a stop near to 1345, 1350, because from where the stock has seen a sustained amount of move. No doubt the 200-day average has been seen broken today, because if you look at the Nifty 200-day average has also been broken, and it is one of the largest heavyweights on the Nifty index. So you can keep a stop of around 1265 from currently 1345 from the current levels, and wait for some bounce near to 1425, 1450.
All right, guys, it's time to hit the rapid fire segment. So I'm going to take a moment to ask and request our experts to keep their answers as short as possible, so as to do as many queries as we can. And the first one is from Pravandan Chand. He wants a technical view on Berger Paints. Berger Paints, which he has bought at 543. Should I book profits or average out? That's the question. Vikas, this one is for you.
You can consider profit booking, because we believe the stock has not seen any significant up move. Post results, there was a spike, and again the stock is just flattening and trading below the short-term averages. So when the reversal happens, if it breaks down its 50-day average, which is placed near to 545, 550 levels, near to its purchase price, the stock could correct fast. Sure. It's better to book profit at current levels.
Okay, book profits. Nikesh Chinu writes to us on Facebook, and this one's for you, Sandeep. He's asking, can he look to hold on to ITC? He's bought at levels of 207, and the stock's at 52-week low at 197 today.
This is one stock where I have gone wrong. Since last couple of months, I've been recommending this stock, because I really find the stock to be at very attractive valuations as compared to the other FMCG players. They all are doing very well, but then somehow at these levels, those who have bought on my recommendation, they can continue hold the stock. But at these levels, again, technically the stock looks so weak, and then the markets are also not all that favorable. So I think he should wait for some time. I think 185.90 can be a level where he can, try to buy on declines.
Right. Sandeep, very quickly, your fundamental view on Affle India, Jason Sohn's question.
I find it very expensive.
Vikas, a short-term view on United Spirits. How is it looking on the charts?
The stock is witnessing some amount of profit booking in today's trade, and large volumes have taken place in the decline. So it can correct further from current levels by another 30-40 odd.
Okay. Vikas, your technical view on Britannia, what's the view forward?
The stock has been with fairly a lot of pressure and failing to cross 3050 levels on the higher side. We believe it can touch the potential lows of those 2780, 2800.
Sandeep, would you advise buying into city gas distribution companies after the recent correction?
Yeah, I think still, IGL is one of my favorite picks. So IGL and Gujarat Gas both looks good to me.
Okay, well, we've run out of time on the show, so I am going to take a moment to thank both our experts, Vikas and Sandeep, for joining us and taking us through their views on the many queries that our viewers have brought forward today.
Remember, we're just a tweet, post, or a call away, so please keep your queries coming, and we promise to address at least most of them through our shows. In fact, for all our previous episodes, you can visit our YouTube channel or our website, BloombergQuint.com. Thanks for watching. Stay tuned to BloombergQuint.